Hello everyone, thank you for tuning in today. Today I'll be sharing with you one new topic called investing in crisis, profit analysis of private homes. Many of us are quite interested to know, is this a good time to buy a property? And to answer this question, we will go through some profit analysis of private homes that have been bought during the last financial crisis. To continue further, I think I want to give a very broad overview of what the market is doing right now. How is it performing in light of the current economic or the current pandemic that we are facing right now? If you look at this chart, it shows you the Singapore's GDP growth along with the URA overall price index. What is this URA overall price index? It shows you what is the trend of private residential prices, how it performs over the last about 30 years, and we put it together with the GDP growth. So if you look at this chart down here, right now we are in this region, which is the first quarter of 2020. We are using the flash estimates that is from URA, and it shows that right now we are already projected to go into a negative. That means it's an indication that there might be a recession that will be coming in. So if you look at this chart here, it shows that in the past, the previous crises were during the Asia financial crisis, 1998, 911, and then of course during the H1N1 as well. So for all these instances, you can see that GDP has been negative down here, which is shown by the red bar. And during this period, the URA price index, which is the price index that shows the price trend for private homes, you can see that every time there is a negative GDP growth, prices of private homes usually will fall. So that happened for Asian financial crisis, 911, H1N1. And right now, is it anybody's guess what's going to happen to private home prices now that we are approaching the negative? But I think this whole chart is quite interesting because it shows us that whenever Singapore goes into a negative GDP growth, it's quite short. Usually it lasts only for about 3 quarters, as we have seen from the past few crises. So hopefully this time round, even if we are going into a recession or slowdown, we hope that it will be short, because we know that the government has done a lot to put in quite a bit of measures to protect the jobs of Singaporeans, and also to pump in an unprecedented amount of $50 billion into the economy. And we have also seen how world economies have also pumped in trillions of dollars to keep the global economy afloat. So this is something we hope that it can help to cushion the impact from the pandemic. So now that we see how private home prices have performed over the past few years, what about sales volume? How do people react whenever prices fall during the crisis? So looking at this one charts the overall sales volume of private homes in Singapore. And you see that every time there is a negative GDP growth, or just now you have seen a price fall, you can see that sales volume spikes up immediately. And this shows that people are rushing in to buy every time there is a crisis. So it happened for Asia financial crisis, during 911 and H1N1. You can see that there is a very steep rebound in terms of the sales demand during that period. And something that is quite interesting to note is that sometimes when prices fall, they do not even wait for perhaps the second or third quarter. Immediately after the first quarter, people have already started coming into the market. So this is the kind of phenomenon that we see in Singapore whenever there is a price fall. So if you go to the next slide, this shows you what happened during the last crisis in 2008 and 2009. There were a few new launches that were launched during that period of time. So for instance, in 2008 to 2009, one of the projects that has been quite prominent is Caspian, where we know that prices were kind of adjusted to about 580 to 620 per square foot, and at that time is considered a very attractive price. And during that period, once the price was adjusted, there were many people that went to a show flat, and almost 300 units were sold within a very short period of time. At that time, I was helping out in one of this project, which is Caspian, and located at Jurong. And I recall that even at 12 midnight, people were coming in with checks. And by the time we processed the options, it was already 3 a.m. And this happened for a few days. And it's really amazing because this this buying phenomenon had happened at the height of the financial crisis. The other project that is also very prominent is this project called Alexis that is located near the Queenstown MRT station. This is one of the project that's also had sold well during that period. In fact, I think within a week. And one of the reasons for the good sales is that it's one of the project with many so-called Mickey Mouse units in that project. And this project has very high rental potential. So this could be one of the reasons why it was selling very well. Another project that adjusted the price from 800 over per square foot in that location, it was launched slightly lower at about 790 per square foot. Again, this project called 8 at Woodleigh, where you see down here, it was almost sold out in 3 days. So these three examples and many other projects like Scala and so on, these are the projects that adjusted the price, their prices during the crisis. And you can see that straight away, many buyers went in, be it foreigners or Singaporeans, to snap up the units. So right now we'll go to the next portion, which is to look at what happens to properties that were bought during the last financial crisis. So in order to look at the profits or loss generated during that period, we look at URA data. Okay, URA data records for us all the transactions that has occurred during that period. So for instance, for new homes that were bought during this period from 2007 to the first quarter of this year, and if these homes were resold, we will then match the caveats. So for instance, if you have bought let's say for example a property in 2008, and this particular unit, if this unit has been successfully resold within this period of time, we will then match the two caveats together. We'll calculate the profit and loss, and then from there we will look at what is the average gross profit that has been generated in that location. So in total, we managed to match about 15,000 caveats of new homes that were successfully bought and sold during that period of time. So this includes resale units and subsale units. So if you look at this, our analysis by region, CCR represents the luxury segment or the prime segment. RCR represents the city fringe, and OCR represents the mass market segment. So for the luxury segment, in total, we managed to match about 2,000 over caveats. And we found that 67.5% were profitable. So it means that about 6 to 7 units out of 10 units were profitable when they resell the units. And the average gross profit that was generated is about 300 over 1,000. For homes in the city fringe, we managed to match about 4,500 units, and the average gross profit generated is about 240,000. And for mass market homes, we managed to match almost 9,000 units, and the average gross profit is about 190,000. So this chart shows us that if you were to buy a mass market home, the chances of making a profit is actually quite high if you successfully resell it. So for example, more than 9 units out of 10 units are profitable, and you can look forward to an average profit of about almost 200,000. But of course, if you have a higher budget, you can go for the city fringe projects or luxury projects, where the chances of making profit is slightly lower, but definitely the average gross profit that you would generate is also potentially higher. Okay, so with this analysis, we'll go deeper into how much profit is being generated at what point you buy the property. So this chart shows us the gross profit that has been generated for all the projects that has been bought. So for instance, like this one, just give you one example. If you were to have bought property during the second quarter of 2009, let's say for instance this period, you have made an average profit of about 300,000. If you were to buy a property, maybe in the beginning of the global financial crisis, the first quarter of 2008, you'll potentially make a profit of about 200,000. These are homes that are located in the mass market region, which is in the suburban areas. So this kind of profit is considered quite high or very high for a mass market home, which we are looking at about 200,000 to 350,000. But the interesting thing to note is that when we chart out all the properties that have been bought, let's say, for example, what we have matched so far in terms of the period that they have bought, this one, the purchase period, you'll notice that those people who bought during the last global financial crisis, they tend to have made higher profits in comparison to all the other periods that other people have bought. So even if you buy during the initial part of the financial crisis, these people will have also made more profits than those at the other end. Now we go to another market segment. Let's say, example, the mid-tier segment. You see that the chart is also quite similar, where the profit that generated is about 300 down here for this the highest profit generator is about 300,000 to almost 400,000 for properties that were bought during the global financial crisis. And you can see that it is very much higher than those profits that have been generated for other periods of time. Then what about for properties that we hold longer? Not everybody will want to do a sub sale. Okay, especially right now, the sub sale level is quite low. So if we take into account properties that were held for a longer period of time, perhaps for more than 4 years, which is after the completion period, and we take into account the seller's stamp duty, because if you sell the property before a certain period of time, you may have to pay a certain tax. So if we take into account all this after seller's stamp duty and as well as for a longer period of time, we notice that the profit margin is still much higher than other periods when you buy it during the global financial crisis. This chart shows you the profit generated for mass market homes. And if we look at luxury homes, for those who bought luxury homes, a similar chart can also be observed, where profit margin tend to be higher during this period where you buy during the global financial crisis. But of course, if you look at this chart, it shows that during this period, there are also a number of people who have made losses when they bought at the height of the price, when prices were one of the highest. For instance, from 2011 to 2013. Perhaps this is the reason why during that period of time, the government introduced a number of cooling measures to make sure prices remain sustainable. We have been talking about profits. What about losses? There are also some concern where people may be quite cautious, because when you buy during a financial crisis or economic crisis, there will be a certain level of risk. So people will ask, what about the chances of making a loss if I buy during an economic crisis? So if you look at this chart, it doesn't show you the magnitude of the losses, but it shows you how many units or how many people actually make losses when they bought during that period of time. So for instance, for this chart, if you were to buy a property, for instance, like just before a crisis, Q3 2007, about 60 people will have made losses when they resold the unit. So when you look at this chart, right, the number of people who make the most losses, or most number of people who made losses, usually has occurred during this period where prices of home is also at the peak. But if you look at people who have bought during this period, the chances of making losses is also much lower. One of the reasons could be because they could have bought the property at a slightly lower price than other periods of time. Now that we look at the profit and loss, we will look at what about those who have generated the highest gross profit over these 17 years. So for a mass market segment, you can see down here, this chart shows us the projects or the units that made the highest profits during this period of time. So for instance, like for the first two examples, Clementi Woods Condominium, these two units, for instance, like this one, Clementi Woods, that was bought during the first quarter of 2007. It was bought at about 1.6 million. And then after that, it was sold about 11 years later for 3.3 million, making a gross profit of about $1.7 million during this period. The next highest is also another Clementi Woods condominium, and this unit was bought at $1.4 million, again the same period of time, and then resold in 2011 with a holding period of about 4 years to less than 5 years, and the amount that was generated is about 1.3 million. Okay, so this is quite interesting because if you look at this chart here, it shows that the highest gross profit generated for mass market homes, most of the people, they hold it for about I think more than 4 years. Okay, so not many were able to make that highest profit within, let's say example, like if you sell it maybe in 1 or 2 years. Usually there's a longer holding period. And the other thing to note is that if you look at the time when they buy the property, you'll notice that most of these units were bought during or just before the crisis. Okay, if you look at all this time period. What about the luxury homes? If you look at the luxury segment, this is another example. St. Thomas Suite was bought around the same period, first quarter 2007, and it was bought at $14 million, resold around 4 to 5 years later for $22 million, and with a gross profit made of about $7.7 million. And this is very significant because it's just for a condominium that you can make a gross profit about $7.7 million with a holding period of 4 to 5 years. Another unit, the next highest unit is Nassim Park. Again, it was bought during the last economic crisis, which was bought for $13 million and bought for $10 million and resold for $13 million with a gross profit of almost $3 million within 5 years. So if you look at the holding period for all these highest gross profit generated, most of them will have held the units for about 5, 6 or 7, 8 years. And if you compare it with mass market homes, it's slightly shorter, and the amount that you can potentially make is also much higher. And again, one of the things that we notice is that most of these units were bought during or just before the crisis. Okay, down here. The next question that comes to us is that when I buy a condominium, how long should I hold a property? Some people say that the property is like a wine where you should hold as long as possible, whereas others will say that it's better to sell within 10 years because the prices may continue to fall, especially for the 99-year properties. So we look at these are for mass market homes. At what juncture do people sell their properties? So if you look at this chart, every dot represents one transaction. And if you look at this, you can see that the majority of the people, this is the time period, that means the holding period before they sell, and this is the gross profit that they make. You'll notice that most people will have sold their mass market home within 10 years or even within 12 years here. And those who are able to hold slightly longer, let's say example here, 10 to 12 years, they tend to make slightly more profits. So for instance, like here, if you want to make a gross profit of, let's say, more than 500,000, which is $500,000, normally these people would not have subsold the unit before it's completed. They will sell it within, let's say here, about 4 years to about 12 years. And this is the highest the unit with the highest profit that has been generated. The holding period is around 10 to 12 years down here. Okay. So with that, we divide out. Okay, what we have seen just now is a scatter plot of all the transactions. So now we put them in terms of the years. That means the number, the holding period, and then we see what is the kind of profit that's been generated. So this is another perspective of the same chart, and you see that those people who subsell the unit down here, that means the subsales where they sell it before completion. A lot of people will sell it just before the completion or during, that means just after the completion. Most people will sell it here, but the profit generated is not that high. So most of the profits generated is about 100,000 to about 200,000. But after that, the number of transactions that occur will gradually dip across the years. And for those people who are able to hold more than 8 years, you'll see that prices of these homes will start to rise quite steeply. So for instance, if you were to sell it after 8 to 9 years, you'll potentially make about 300 over thousand. And those who hold it for more than 10 years, they make about 450,000 and so on. So this shows that the optimum holding period for mass market home is perhaps after 8 years. Okay. So for all these transactions, what about those people who bought during the last crisis? What is the optimal holding period for them? So from here, we look at the subset of these people. And when we look at these people who bought during the crisis, you'll see that just now, to generate the maximum profit or the most optimum profit of about 300 to about 500 over thousand, they hold it for 8 years. But if you were to buy the property during the last financial crisis, you'll notice that the same amount of profit can be generated if you hold it for 3 to 4 years or 4 to 5 years and beyond. Then after that, it plateaus. So this shows that perhaps those who bought during a crisis because they buy at a slightly lower price than other people, the holding period is also shorter, and therefore they are able to achieve their optimal profits much faster than other people. Just now we have been talking about profits. What about capital appreciation? How much do you think prices have increased over the years for properties that were bought during the last crisis? So one example, as I mentioned just now, is Caspian, where most of the units were bought around 580 to 620,000. And over the last 10 years, most of these properties have increased price. And in fact, for those who resold the units, 100% made profit. And the average profit that was made per unit is about 500 over thousand in about 8 years. And the highest profit ever made is for a first floor unit. There is for a profit or gross profit of about $844,000. Okay. And another example, this is in the city fringe, Dakota Residences, which is quite near the MRT station. Again, for units that were bought during the financial crisis down here, which is about 800 over per square foot to about 1,000 per square foot. These units, when they resold it, everybody made profit. And the average profit made was about 500 over 1,000 for a shorter period of time, or averagely about 5 years. And the highest profit made is for a 19th floor unit for $1.58 million. Okay. So in summary, this whole presentation shows that during the last crisis or the previous crisis, usually prices will fall, but for a very short period of time. And the buying opportunity is actually very short because sales volume will usually rebound very quickly. And for those who bought during the last crisis, which is 2008 to 2009, they seem to have made higher average gross profits, and there's also a lower probability of making losses. And for them to yield the same gross profits as other people during the other periods of time, they only need a shorter holding period. Okay, so I hope that this analysis, what we have done so far, will be useful for you as a reference. Of course, every crisis is different. Nobody will be sure what's going to happen after the pandemic, because this is something unprecedented. In fact, this global crisis is nothing that anybody has seen so far, as far as our generation is concerned. So what we can do is that we can just take reference from what happened in the past, and perhaps to give us a bit of maybe a rough gauge of what to expect of the property market. So again, to close off, we hope that this analysis will be useful for you. But we would wish to reiterate that we are not here to ask everybody to start rushing to buy a property right now, because we do believe that it's important for you to also assess your own financial finances, and to see if this is really a good time for you. But for those who have some spare cash and you've been looking for a good opportunity to come in, perhaps this deck of slides that we presented may be a good reference for you. Okay, so thank you very much for tuning in. We wish you well, and stay home, stay safe, and All the best to you. God bless. Thank you.